Today we will be discussing a very important topic of banking, that is KYC and AML guidelines. KYC AML guidelines stands for Know Your Customer and Anti-Money Laundering Guidelines. And in this topic today, first of all, we will discuss why KYC, and then we will also discuss the process about the money laundering, process of money laundering, how it works. And in the process, we will also learn few details about the organization FATF and FIUIND. Then we will also learn key elements of KYC, which are prescribed by Reserve Bank of India, and every bank need to take into account in their KYC policy. And when I said Reserve Bank of India gives guidelines, under which provisions Reserve Bank of India gives guidelines, and these key elements are customer acceptance policy, risk management, then customer identification procedure, and then monitoring of transactions. And thereafter we'll try to discuss something about maintenance of records under the KYC AML guidelines, which are part of Prevention of Money Laundering Act. And thereafter there are certain obligations on the part of the banker to report transactions to FIU. And then we'll discuss few more elements of KYC. Those are officially valid documents, OVD, and then we'll learn something about central KYC registry, okay, and then digital KYC, that is video based customer identification process, Aadhaar based KYC account guidelines, and then learn some more thing about small accounts, money mules. Okay, I think this is what today I have planned to cover. First of all, why KYC AML guidelines? A most important element is, it is basically for CFT is a term you need to know, that is combating financing terrorism, and also prevent money laundering. Rather than that, prevent banks from being used by criminal elements for money laundering process. And moreover, this is a compulsorily an international prescription given by FATF. Okay, so these are the reasons due to which KYC is got implemented in a country from 2002. Okay, and then the money laundering, naturally a term which is coming in the discussion. Let's understand few words about that. Money laundering is nothing but concealment, means hiding, concealment of origin of illegally obtained money. It is not about the money which is tax not paid, but that's also part of it. Illegally obtained money, hiding it is a money laundering. And that origin of illegally obtained money, that origin hiding is money laundering. And typically it happens by involving multiple accounts. And normally it has got 3-step process. First step is placement. And second step is layering. Third step is integration. Okay, placement, layering, and integration. What is this placement all about? Placement is nothing but exchange of currency, doing more and more cash transactions, okay, and trying to keep the money in different account, fake accounts. And then the layering is all about transferring money from one account to another account, different account transfer, wire transfers. And integration is all about creating this particular account appears as if it is a genuine one. So that's what is a money laundering process, and KYC's basic aim is to prevent banks from being part of that activity, and therefore KYC is a most important element of banking. Okay, now next is a FATF. FATF. What is FATF? Financial Action Task Force. Financial Action Task Force is an intergovernmental organization, international organization which was conceived by G7 nations and founded in 1989. Founded in 1989. Who founded it? Originally it was a G7 nations, and as on today there are 39 member countries, and it has given recommendations. Okay, it has given 40 recommendations, and those recommendations stands as a guidelines for maintaining or implementation of Prevention of Money Laundering Act in a country, and also the implementation of KYC guidelines. And under this only, this organization FIUIND, that is a Financial Intelligence Unit, FIU India, FIU Pakistan, FIU, like that, in each country such organization is required, and this organization is actually a nodal agency for receiving, processing, analyzing and also disseminating information relating to suspect financial transactions, and it as an basically a coordinator for enforcement agencies and most powerful organization in our country. Okay, so I think with this backdrop, let us start discussing on KYC. And what is this KYC all about? Know your customer. Know your customer is nothing but ascertaining the genuineness of the customer, whereas AML is all about genuineness of a particular transaction. Okay, and RBI issued the guidelines, and RBI issued guidelines under section 35A of Banking Regulation Act. Okay, though guidelines came right from 2002, the continuous amendments are happening, and the latest amendments as per the April 20th 2020 circular by Reserve Bank of India. And the key elements of this KYC policy are the customer acceptance policy, risk management, customer identification process and monitoring of transactions. Let's learn now what is customer acceptance policy. Means every bank need to have a very clear policy about which accounts they'll accept, which accounts they'll open, and in that they must have to state that there will never be an account in the name of fictitious person, no Benami account, no account in the name of the people whose name is circulated by Reserve Bank of India as a sanctioned list or accounts or banned organizations, and no account where the procedure relating to CDD, that is customer due diligence, implementation is not possible, that these accounts cannot be opened, and this CDD procedure need to be implemented by banks at the time of opening an account, and every account must get a unique code, that is UCIC. UCIC stands for Unique Customer Identification Code. Now next, CDD procedure is required in respect of all the persons if it is a joint account, in respect of all the partners who are operating the account on behalf of them, and without completing the CDD procedure, no account based relationship should begin. And this, at the same time, Reserve Bank of India made it very clear that this process should not result in denial of banking facility for a genuine public, and for that only there are guidelines relating to small accounts. Okay, now let us learn something more about risk management. Risk management, under this category, every account must be classified on the basis of risk perception as a low risk, medium risk and high risk. Low risk, medium risk and high risk means every account based on the risk assessment need to be classified, and this risk assessment need to be done on the basis of activity, financial parameters, financial status of the person or the account, information available with regard to business, location of the business. These are all various factors, and most important factor is source of funds. whether the bank or the customer is really in a position to tell about what is the source of money, and whether the transactions are not so complex. So complexity of transaction and source of funds, this is a critical factor for determining a account whether it is a high risk or whether it is a medium risk or low risk. And bank must have to have a very clear policy in this regard, and this risk review need to be carried out once in a 6 month. However, the risk related aspects documents need to be obtained or renewed once in 10 years. Okay, and for medium risk it is once in a 8 years, and for high risk it is once in a 2 years. And then let us come back on the third point, that is CIP, that is Customer Identification Procedure. And under this Customer Identification Procedure, it was told by Reserve Bank of India that bank need not have to rely on introduction. No question of introduction. CDD carried out by a third party is acceptable, and the bank need to have a clear process which third party they'll engage for the purpose of customer due diligence activity. And this CDD must have to carry out at the beginning of the account based relationship, and at the same time not only account based relationship but also for carrying out international money transfer. In case there is a doubt about authenticity of data provided, then also CDD need to be carried out. Even at the time of selling of third party products need to be carried out. Loading a data on a prepaid card need to be carried out. Okay, and this is what all about the CDD and the customer identification process. And in this regard only, the customer identification is done on the basis of officially valid documents, and officially valid documents are stated under KYC policy. And also there is a central KYC registry. In case bank is relying on central KYC data, then record of information must be obtained within 2 days from central KYC registry. Okay, what is the central KYC registry and which are all the officially valid documents? We'll learn a little bit later on. And now let's continue on the monitoring of transaction. What is this monitoring of transaction? That every account, whatever transactions are happening, initially accounts are being either classified as a low, medium, high risk based on the information provided. And based on now monitoring, bank need to take a call whether the accounts are properly there, and any ambiguity with regard to the classification and the transaction, then bank need to appropriately initiate measures. So newly opened account compulsorily need to be monitored. High large value complex transactions compulsory need to be monitored. Unusual pattern, if it is observed in the account, need to have a very deep monitoring. Okay, and without having any economic rationale, if the transactions are happening, compulsorily monitoring need to happen. Okay, and bank need to prescribe a threshold limit, upper limit for taking care of this. Okay, any large value transactions are bound to be a part of it. And then after understanding the 4 important elements of KYC, there is an additional part under the KYC, that is the record management. Means what? Maintenance of record. And this comes as a Rule 3 of Prevention of Money Laundering Act. Under that Rule 3, it says that bank need to maintain a record up to a period of 5 years relating to transaction. And in addition to that, all records relating to identification of a customer need to maintain up to a period of 5 years from the date of cessation of relationship. Means from the date of account getting closed. Means during the opening of an account, that is during validity of account, all records bank must have to keep with them. And then in addition to this, the bank need to maintain a record relating to, number 1, the all cash transactions more than rupees 10 lakhs. Cash transactions more than rupee 10 lakhs. Not only this cash transactions more than rupee 10 lakh, but integrally connected series of transactions exceeding rupees 10 lakhs in a month also need to be maintained. And then non-profit organization, that is NGO, trust, okay, transaction exceeding rupee 10 lakh need to be maintained. Then forged currency, any fake currency, counterfeit currency transactions, bank need to maintain a record. Any suspicious transaction bank identified, transaction need to be maintained. And then cross-border wire transfer means from one country to another country, remittances are happening whether inward or outward, those up more than 5 lakhs, okay, more than 5 lakhs rupees, okay, cross-border transactions need to be maintained. Now this record when it is maintained, then naturally these records will be used by the bank for the purpose of reporting, and this reporting is compulsorily need to be done to FIU-IND as well as to Reserve Bank of India. Basically it routes through Reserve Bank of India. So cash transaction report is the first report, CTR. CTR is applicable for transaction exceeding rupees 10 lakhs, okay, in a month, and then integrally connected transactions also are a part of it, and this CTR need to be submitted to RBI before 15th of the next month, means this month transactions need to be reported by 15th of the next month, and this is a monthly statement, monthly reporting. Then second is a non-profit entity report, NPTR. This NPTR, as I already told you, exceeding rupees 10 lakh, monthly report again by 15th of next month need to be submitted. Then third is this cross-border transaction report. Cross-border transaction report need to be submitted once in a month, okay, for more than rupees 5 lakh. Then next is an important thing, that is a suspicious transaction report, and the suspicious transaction report need to be submitted to FIU-IND through Reserve Bank of India within 7 days of transaction identified by bank as suspicious, means within 7 days. And then next is the counterfeit currency, that is a fake currency transaction report. In a month, all transactions put together need to be reported to Reserve Bank of India, okay, and then thereafter the information will get passed on to FIU-IND. I believe that a large part of the KYC is now over. Let us come back on OVD. OVD stands for officially valid document. Which are all those documents are considered as a valid, officially valid for the purpose of identity, and those are: number 1, passport; number 2, driving license; number 3, that Aadhaar number, that is a proof of holding Aadhaar number; then voters ID, okay, and then the Manarega, that is National Rural Employment Guarantee Program, job card issued, okay, job card issued. And then next is any letter issued by National Population Registry. So these are the 6 officially valid documents, and in case the address stated in these documents is different from the address which is given by the party for the purpose of account, then compulsorily the officially valid document which is limited for the purpose as a proof of residence are utility bills such as electricity bill, telephone bill, postpaid mobile bill, piped gas bill, water bill, and but all these should not be more than 2 months old, okay. And then letter of allotment of accommodation, in case it is accommodated, that accommodation is provided by some organization. So these are the officially valid. Central KYC registry. What is this central KYC registry? It is a centrally reposition record, okay. It is a centralized repository. What about that? It is keeping the KYC records of a customer, and basically its uniform KYC norms are applied for the purpose of interusability of the different organizations, different financial institutions. This is the key. And then second one is a uniform KYC record. These are the 2 key points it solves, and it also facilitates a KYC search. It also enables uploading, downloading and updating the KYC record. Customer need not have to repeatedly submit the KYC document. Once there is a unique KYC identifier is linked to a particular ID. Okay. So this is what is all about central KYC.
If you like this video, don't forget to subscribe. like, share and comment. See you in next video.